Real estate is our most reliable wealth builder, but historically, it's trapped behind three massive barriers. It's deeply localized, highly illiquid, and requires massive capital. If you want to buy a rental property in your own zip code, that's hard enough. But trying to diversify by purchasing a penthouse in Dubai or a commercial space in London? For the average retail investor, that cross-border jump is nearly impossible. Kemedar is a prop-tech super app built specifically to smash all three of those geographic and financial barriers at once. It pitches a system where AI handles the due diligence, fractional shares lower the buy-in cost, and the geographic reach extends to over 120 countries. This ecosystem map shows four main pillars: global investing, Kemefrac fractional ownership, ThinkDar AI analysis, and Kemedar and Kemework property services. From buying a micro share of a high-rise to sourcing a local plumber, the platform is an absolute labyrinth. The question you need to ask isn't whether Kemedar works. It's figuring out exactly which specific layer of this massive ecosystem matches your personal capital constraints and risk tolerance. Let's look at the first common profile: the capital-constrained retail investor looking for passive income. This quadrant chart maps investor profiles by capital and operational control. Operating with limited funds, your entry point is directing $10,000 to $50,000 into Kemefrac shared ownership pools or REITs. This grants immediate passive exposure to premium assets, like Dubai penthouses. Kemedar targets annual returns for these fractional assets around 8 to 12%. But getting a slice of a luxury high-rise for the price of a used car requires a severe structural trade-off. You surrender all operational control. You cannot force a sale, you cannot manage the tenants, and you certainly can't order property upgrades to increase its value. Because you don't hold the physical deed, your ability to realize those returns and eventually cash out is completely tethered to Kemedar's internal liquidity and the stability of their tokenized ecosystem. The retail path trades your autonomy for global access. Your financial success becomes a direct bet on Kemedar's corporate health. The second profile is the global diversifier. This is someone with higher capital reserves who wants direct cross-border property exposure. Returning to the quadrant chart, this investor brings significant capital, demanding direct ownership control. The primary tool is Kemedar's ThinkDar AI engine, evaluating direct property acquisitions by processing millions of data points across international markets. This builds a distributed portfolio rapidly, skipping the need to assemble fragmented local scouting teams. However, relying on algorithmic due diligence to buy foreign assets carries a specific hidden risk. Even with massive historical data inputs, algorithms inherently struggle to quantify physical ground truths. An AI model can accurately predict historical yield curves, but it might miss an unrecorded zoning dispute 3 blocks away, or a subtle shift in neighborhood sentiment that a local property manager would sense immediately. While ThinkDar scales your scouting ability, the diversifier risks buying the spreadsheet metrics while remaining blind to the reality of the asset. Finally, we have the hands-on operator or developer who is actively managing physical properties. On our final chart update, we see an investor requiring maximum operational control. This user bypasses financial tools entirely, utilizing Kemework to hire professionals and Kemetro to source materials. The workflow uses live auctions and AI price match to drive down renovation costs, condensing fragmented supplier relationships into one centralized dashboard. The catch here is the inherent danger of ecosystem lock-in. Your operational efficiency is entirely dependent on the actual depth of Kemedar's network in your specific region. While Kemedar's contractor and material networks are deeply established across Egypt and the broader MENA region, you may find those same networks extremely shallow or entirely non-existent if your physical properties are in emerging global markets. The operator path maximizes efficiency, but only if your assets sit squarely inside Kemedar's strongest geographic strongholds. Stepping back, we can now look at the platform as a whole. Kemedar is an incredibly powerful tool for crossing geographic borders, but its nature as an everything app becomes a liability if you dive in without clearly defining your own scope. This audience match scorecard maps exactly where the platform makes sense. The perfect user is the investor seeking passive, remote exposure to international real estate while working with limited capital. For them, Kemefrac and the platform's REITs provide a highly structured, low-friction entry point. Conversely, we have to look at who should actively avoid these tools. If you are a hands-on landlord managing properties in a familiar, highly localized market, this isn't for you. For local experts, a broad, algorithm-driven global approach offers zero tangible advantage, and platform intermediation will just eat directly into your profit margins. Ultimately, PropTech is a balancing act between the digital promise of scale and the physical reality of the asset. Ignore the blanket marketing hype around AI and engage strictly with the single layer of the platform that fits your distinct capital profile. Because whether you hold 1% of a skyscraper or 100% of a duplex, real estate wealth requires critical, independent evaluation of the asset itself, regardless of the algorithms wrapped around it.